We've all heard it. DPI is the new IRR. Liquidity is the most valuable currency in today's private markets, and secondaries are helping to rewrite the playbook. After a decade of robust exits, we've seen 3 straight years of low distribution yields within private equity. New IPOs have stalled, and M&A volume has lagged broader net asset value growth within the industry. Both LPs and GPs are looking for ways to create liquidity, and the secondary market has stepped in to fill that gap. For LPs, secondary transactions have helped drive liquidity through proactive portfolio management, while for sponsors, continuation vehicles have enabled them to generate distributions for their investors while holding on to their best assets for longer. The result? A market growing in volume, sophistication, and strategic importance. We saw record secondary volume in 2024, and the results from the first half of this year suggest that we're on pace to break that record once again. Private equity NAV continues to grow, creating abundant opportunities for secondary funds. Yet, total secondary penetration has remained relatively modest since 2013, but with a huge pile of dry powder driving growth in the foreseeable future, even a modest increase in secondary market penetration could lead to a doubling in overall secondary market volumes to over $350 billion by 2030. Rather than sitting back and waiting for liquidity to materialize, LPs are now looking for ways to proactively manage their private equity portfolios. Many LPs are returning to market with growing frequency and see secondaries as a key tool towards their portfolio management. On the GP side, solutions that were once reserved for distressed assets have morphed into sponsors retaining exposure to their best assets while creating liquidity opportunities for their investors. Despite macroeconomic uncertainty, long-term tailwinds continue to drive the growth of the broader secondary market. Private equity NAVs remain at historic highs. Secondary market penetration remains relatively modest. Growing liquidity needs are fueling both LP and GP-led transactions. These dynamics point to a sustained expansion in the market in the years ahead. Rather than signaling a market peak, the record-breaking volumes of 2024 signal the sector's increasing maturity and critical role in the years ahead. We see this as a generational opportunity, where our scale, our data insights, and our GP relationships will enable us to drive differentiated access and differentiated results on behalf of our investors.